It's a bull. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. I'd like to say good morning to all my my happy fish out there and all the grumpy fish. See the grumpy fish back there? Look downs and Bermuda chubs. That's actually what you're looking at. These are called look downs, and they always look like they're grumpy. And Bermuda chubs always, if you ever see them coming towards the camera, they look like they're smiling at you. So that's kind of why I call them the happy and the grumpy fish out there. This is the live Deerfield cam, if you didn't know, and I'm sure most of you did. So I watch it every morning. I like to start the show out with something kind of comforting and relaxing. Good way to start, especially in South Florida. This is what we're all about. We're all about the water, fishing, and all that good stuff. Well, let's take a look at markets. As much as I like to talk about fishing and water and doing water sport type things, this is a gold and silver daily report. So what's happening out there over the weekend? I kind of thought we were going to get a little monkey hammering going on with the spot price on silver getting hammered. But it looks like it kind of got its hammering a little bit on Friday. Ted Butler had mentioned that the short positions, the commercial shorts had added to their positions even more as he had feared. Not going to go into great detail about that, but that is kind of public information. So I kind of expected that we'd probably see a little more hemorrhaging on the silver and gold side, particularly silver side, I should say, I'm sorry. And we did not. I thought maybe we'd see it this morning, but no, apparently not. We're up about 22 cents. Perhaps the short positions didn't really have a big effect on it. There seems to be a lot of interest in silver out there right now. Gold currently at 1808.91, so we busted over that 1800 mark pretty, I don't want to say easily, but we're over that mark right now, that psychological mark. The low was 1793.21, I suspect was last night, opening markets, and a high of 1810, probably not too long ago. Looks like all the activity, as I've been stating for quite some time now, at least a few weeks or more, 3 or 4 weeks maybe, I've noticed that a lot of the activity is happening in gold and silver in New York in the opening hours, and slightly before that as well, probably in the Asian markets too. Let's take a look, and again, 1793, 1810, 1808 currently in silver. Wow. Again, I thought we were going to see a down morning, but nope. 24.34 right now, and a high at 24.59. We're about a couple cents off that high at 24.57. I suspect this is, again, all happening in the New York markets. We'll take a look at the 24-hour charts here in a few minutes after this. Take a look at platinum here, 1,056. She's hanging on in that mid-$1,000 range and holding its ground. As I said for quite some time, it seems like platinum's kind of been a tell. When gold and silver were looking really weak, platinum started showing some green right there. And I noticed that silver and gold started following it, as well as for a little while silver and gold were in the green, platinum would start showing some red there, some little consistency in the red, and gold and silver would follow it as well. So it was like platinum was a tell for a little while, but I like the, it looks good. I think platinum, being an industrial metal, is not being monkey hammered or held down maybe as much as gold and silver. Now, don't get me wrong, platinum is run by the white metal cartel, the mob, so to speak, which is the Canadians, the Russians, and the South Africans control that entire bourse. They control the platinum market and the palladium market, I understand. But no less, I don't think it's been tied to the same kind of monkey hammering that silver has. I don't believe there's any big commercial banks out there shorting platinum per se. I could be wrong on that. I don't follow that. So, again, I could very well be wrong about that, like they do silver at least. And I don't think platinum has an issue with central banks monkey hammering platinum like gold has an issue with. So gold and silver have their both separate issues as far as monkey hammering and who does it. Platinum does not. So maybe platinum is naturally reacting to this commodity boom that we're seeing. However, maybe not, because platinum should be, again, in my opinion, much higher as well. So we'll see. Well, let's move out of here and take a look at the charts overnight. And 24-hour bid on spot silver. Where's it? Here, we'll look at the gold chart first. And this would be the close on Friday. Of course, as you can see here, where is it? Right there. There's a line. There is their update. Remember New York, 1810. Take a look at that, and then look what happened by noontime. Again, in New York. So all this activity has been happening like between the opening and noontime in New York, I've noticed for the last few weeks. and then the rest of the day is kind of flat. And this is kind of a perfect example of that, an over-exaggerated example, but a perfect example of that. Look, 1790s and boom, right there. And then another boom, straight down, but kind of leveling off to where it was. And that's what I've been noticing. Gold has been making higher highs and higher lows. So that's really a good sign for the gold market, I believe. It's starting to show some legs off the bottom here. And here, look at Sunday. Here's Sunday's opening. Not too much happening. I suspect, I'm not sure where this market is, probably Hong Kong, I would say. But Hong Kong markets, well, hang on a second. What market is open at this time? It looks like New York Globex. Okay, that's where New York Globex closes. And then New York Globex opens again here. Well, anyways, I'm not going to try to explain that little area. So take a look here. And this is probably the Hong Kong markets. It looks like they kind of get up around that 1800 mark, but nothing broke 1800 after that knockdown on noontime on Friday. Kind of hovered below that 1800 until looks like last night. Again, Hong Kong markets, boom, boom, right there. And again, it looks like in the London market, more than likely, because it appears that Hong Kong was nope. Looks like that all kind of transpired in the Hong Kong market. But again, tough to say. I know that New York Globex markets are thinly traded markets for the metals, but that's where you would see a lot of monkey hammering would be in New York Globex market, from my understanding, from what I've read in gata.org in the past. So here we go. October, here's today. Let's take a look at the opening today. And again, where? New York. Well, actually, it looks like last night gold started breaking in Hong Kong and probably London, kind of sideways, but the New York markets again opening up. There's your line up. Let's see what happens today for the rest of it until noontime. Tomorrow we'll kind of get a look at this tomorrow's chart, and let's see what happens if this line kind of continues up a little bit and does a sharp downturn again. That's kind of, again, seems to be the trend. Same thing with silver. Take a look at silver here. Both lines moving. Let's see, gold. I mean, that's almost identical. Look at that. That is nearly identical line except for the overnight markets. But if you look, let's see, the blue New York close and October. Let's take a look at this morning's market. Blow that up a little bit. And the same thing, New York. There we go. There's a New York opening of the New York market, and that's where we start to see this upward movement again. Not dissimilar till to Friday. Let's see if it makes that kind of same downward kind of valley there by noontime. We'll see what happens. Unusual strength though in silver. I really expected silver to get a little more monkey hammered this morning. I'm happy to see it did not. Of course, if you're waiting to buy the frickin' dip, sorry about that. But don't listen to me. I obviously I do not have a crystal ball, and I've not met the person yet that does have a crystal ball that tells you what these markets are doing. I've been doing this for what? Since 1977. I started working for my father. I think really seriously, probably into the 80s. I went through that bull market, went through 2012. So I've been doing a long time. Watch these markets every day, and they still surprise me sometimes. It's not sometimes, a lot of times it still surprises me. However, surprises are really just lack of having the knowledge. You usually find out afterwards what happened, usually, not always. The gold price, again, I got the macro trends charts up here. I've been kind of gagaing over the macro trend charts for quite some time. They've got all kinds of cool data out here, gold to monetary base ratio, gold prices versus silver prices, which if you take a look will line up very closely. You'll see it's almost hand in hand. That's what I'm saying is a lot of silver buyers need to keep an eye on the price of gold, because really, generally where gold goes, silver will follow. So, I mean, if you're just a silver stacker, you don't mess with much gold, it's important for you to watch and follow the price of gold just as much as it is for you to follow the price of silver and understand what's going on in that market as well. However, silver does have some interesting dynamics that gold does not. Two separate markets, two separate entities, monkey hammering them. So, and but again, they're very similar in their price action and qualities. Actually, one, other than the color, density pretty good. I don't know if gold is good as conducting electricity as silver. I'm told that silver is a better conductor of electricity. I've got to look that up. Let's take a look at go back. Not going to kind of play around with these charts too much today, got to kind of take a look at one. Silver to oil ratio, Dow to silver ratio. I was actually looking at this oil and gold price chart. Gold prices versus silver. And here, I'll have to kind of look at this a little closer later. Gold to oil ratio. Well, there's the ratio right there. I was kind of looking at gold prices versus oil prices. There we go. Take a look at that, because oil's in the news right now, correct? You know, one of the commodities that's going up and supposedly part of the big inflation that we're going to start seeing here. And take a look at the correlation over time with gold and silver. Now, what's pretty cool is take a look at this. It is almost exactly the same through the 50s and 60s. And then you'll start to see that gold and oil start to take off about the same time. You know how we look at that gold and silver chart just a few minutes ago? Well, take a look at this chart. I mean, there's a very close correlation until you get into this point right here, where gold prices go up substantially, oil prices go down substantially. Now, I'm sure there's an explanation. I mean, look, it totally separates right here at some point. I think, though, what we're seeing here is gold and silver, I mean, gold and oil are reacting to the monetary base, you know, the amount of money that's printed, the economics of everything that's going on. And if you take a look at here, what is this, 2014 through, well, we're going to start to see oil prices climb up substantially. So, but again, look at this. Look at this. I think this has to do with money supply, more to do with money supply and gold's reaction to the money printing and gold's reaction to the recessions and the economic downturn, where we see this kind of separating. And maybe oil is going to go down because in an economic downturn and economic recession, especially what we learned in 2020, where everything shut down basically. There wasn't a lot of use for oils. Gas stations were pretty much empty. People weren't traveling, planes weren't flying, boats weren't sailing or cruising along. So, you know, oil's used in a lot of products, whereas gold is really not used in products, but more, again, economic than anything. So that's probably why you see the separation here. However, we're starting to see all commodities climb up substantially. Let's move out of charts here. They're pretty fun to look at, but let's talk about this article here in Zero Hedge. You can read this for free. Turkey drains the wholesale silver market. I started to read this. I don't really watch videos too much myself, so go figure. A guy that makes videos doesn't watch a lot of videos, but sorry. Turkey drains the wholesale silver market. I couldn't find any news or anything to substantiate that. Again, didn't watch the video, but couldn't find any news that would substantiate that Turkey drains the silver market. You'd think there'd be some news out there somewhere on besides the video, but again, maybe I'll take a look at it later. What will drive gold prices in the next 70 days? Analysis by VBL. I like VBL's stuff. He doesn't mind throwing an F-bomb out there occasionally too. I saw one of his videos, and I guess we could go into that, but this is the one I wanted to talk about real quick. It's again on ZH by Tyler Durden. I believe this is the gentleman that's an alias he uses, but I believe this is the gentleman, obviously, look at the picture, that runs or actually owns Zero Hedge, okay? And he writes a lot of stuff, very intelligent man. And I'm going to kind of read this right here. 3,000 a month, not years. Gold inflation protection means violent run-up is imminent. And that's kind of what, you know, that's kind of what I see happening with precious metals is we're going to wake up, we're going to wake up one morning, because I'm going to be kind of clueless to it perhaps. I mean, we know it's going to happen, but exactly when and when you'll see that kind of line like this, you see that line right there, boom. We're going to wake up in the morning and it'll just be up $50 or $100 on gold or something like that. Silver will be up dramatically just the same, a buck or two, and then it'll take its run. And play catch up with the rest of the commodities, in my opinion, which I don't believe are going to come down in price. I don't think we're ever going back to cheap commodity prices again, folks. This is pretty much it. Gold and silver have lagged behind everything, so great opportunity for people to still buy. But let's take a look. Tyler Durden says, while cryptocurrencies, let me see if I can expand this a little bit. I can read that much better. All right. While cryptocurrencies have been stealing the headlines recently with record highs amid inflation hedge narratives, I like the way he uses that, Commodities have put in a strong performance amid supply chain shocks and unprecedented demand interference. Monetary fiscal policy, something we just talked about a moment ago. As everything from copper to crude and aluminum to zinc has soared, one metal has lagged. Well, not one metal necessarily, sir, but there's another metal that has lagged as well, just as much as silver, which is silver. But take a look at this graph. It's pretty easy to see. And 2020, 2021, look, natural gas, zinc, wheat, aluminum. You could put you could overlay all kinds of different charts from different commodities over this, and you will see that pretty much everything other than gold and silver has been on the upswing and the uprise. And again, that's why I keep saying that when you see this move, and the reason it hasn't moved dramatically is because you've got a lot of artificial things going on out here. You've got short positions with the silver, the 4 to 8 big banks holding the price of silver down, which is artificial, really. In reality, it should be up here with the rest of the metals. And gold, you've got central banks and the BIS holding the price of gold down, because gold is a barometer. The reason GATA contends that one of the reasons that central banks keep the price of gold down is because it is like a gauge of inflation. And the higher the price of gold goes, again, it's a gauge of inflation, and that's my understanding, and I think that's how they look at it as well. Greenspan or Volcker or somebody at one point had made some comment about that the Fed does use that as a gauge of inflation, and there you go. That's the reason they're not going to want to see it go up dramatically. However, as I said, gold and silver, this is what we're going to see. It's going to play catch up like this. You're going to wake up in the morning, you see this line for gold, boom, going to catch up and probably surpass a lot of other metals as far as percentages go. Let's move. Boy, I could make this article much longer, but let's finish off Tyler Durden's article here. But as Bloomberg reports, two of the biggest names in Canadian mining, the former chiefs of Goldcorp, David Garofalo and Rob McEwen, predict investors will not catch on soon that global inflationaries predicts investors, i.e. retail people, wholesale investors, whatever, the big whales, investors will catch on soon that global inflationary pressures are far less transitory and more intense than central bankers and hedonically adjusted consumer price indexes suggest. Okay, when the realization sets in, gold's inflation protection appeal probably will send prices to $3,000 an ounce from $1,800 now, according to Garofalo. Such a run-up would be a down payment to McEwen's $5,000 long-term prediction. I'm talking about months, he said. The reaction tends to be immediate and violent, and when it does happen, that's why I'm quite confident that gold will achieve this $3,000 in months, not years. Now, one of the articles that was up here, and it's not here right now, written by VBL, is VBL points out in the ZH article that, again, I didn't read there, that we're running into the seasonal months for gold and silver, where gold and silver typically do run up in price. So are we going to see $3,000 an ounce in gold this year? I don't know. I could see $2,500 pretty easy, so $3,000 is certainly not any stretch. And I believe also that this gold and silver are dramatically underpriced, however, and depressed. They can only do it for so long, though. They can only do it for so long, and I think they're about to lose control of it. With the big short positions that were recently added into silver, I would have expected a bigger smackdown than what we've seen so far. Again, it's not completely over, but I would suspect we would have seen that built in already, and we really haven't. There seems to be big demand for silver, especially on the physical side, not the paper side. Let me move along from here. McEwen warns that the global monetary and debt expansion to cope with the pandemic, as well as secondary drivers associated with supply disruptions, will have people turning back to traditional methods of protecting wealth. It's not just the dollar, he said. All currencies are buying less than what they were buying a year ago. And as you know, folks, this is a central theme of what I talk about right here. All currencies. Really the winner is the last horse to the glue factory when it comes to all currencies. All fiat currencies decline in their value, decline in their buying power. It's his history. It's fact. There's never been a fiat currency that's survived any length of time. I think the United States, maybe the British sterling, I'm not sure, are or were the longest surviving fiat currency in history. I believe the United States actually is, and we are the experiment right now. However, look at the buying power of the dollar since even when we got off the gold standard. Zill. I mean, it's down substantially. So this is exactly what's been happening, and this is why gold has been a great protection. It's all about wealth preservation at some point. You got your money that you use to get earnings, and then you've got wealth preservation. That's what gold and silver is, wealth preservations. So let's move along from here. So I look at that as an unprecedented development, at least in our lives, that is going to take effect the value of fiat currencies around the world. We have seen this kind of delayed response before, and absolutely true. 2014, 2021, 2000 to 2011. As Peter Schiff noted, the knock on gold and silver has always been you forgo interest. And that is, you hear that often. Well, when real rates go up, when treasuries start paying more, bonds start paying more than bonds are first dangerous, number one. But when treasury starts paying more, people will flee gold. First off, that's bullshit, because does anyone remember the 1980s when rates were up substantially? About the same time as gold was up substantially. But let's just fast forward and move into now. Higher interest rates, if treasuries are paying higher interest rates, the cost of living, if you believe the CPI rate and the PP, I think it's PPE and the CPI, if you believe those rates, which a lot of people don't per se, a lot of people say that they're vastly underreported and that they're probably twice what they actually represent. Again, the CPI, Consumer Price Index, the PPE, they're probably underreported by half, okay? So, if you think that you're buying a treasury that pays 2, 3, 4, 5% or something, I mean, that's like a lot, man. If you think that you're making money with the cost of living being higher than that, and you're deluding yourself. So, and I think Peter says that here. A higher interest rate increase the opportunity cost of owning the metals. For example, if your interest rates are 10%, you own gold, you're giving up 10% interest on money you have in yellow metal. But when rates are negative, it doesn't matter. And that's what we are in. We're in negative interest. We're in negative rates. Even if the Treasury, even if they pay more and they pay higher and higher rates, it's still not going to, it's still going to be in the negative. They can't go into positive rates. If they're negative 2% or negative 10%, nobody wants a negative yield. So as long as yields are negative, you want to get out of bonds. It doesn't matter how negative. Once you're losing, it's a loss. Ultimately, a negative rate environment, no matter how negative, should be bullish for gold and silver. The other tailwind for gold and silver is traders still expect the Federal Reserve to respond to inflation by tightening monetary policy and thus raising interest rates. Well, again, it's the same thing. Oil prices are rising as a result of inflation. Gold should be rising as a result of inflation. It should not be falling because investors expect the Fed to fight inflation. Again, if the Fed could fight inflation, they'd be fighting it right now. The reason they're not fighting it, the reason they're pretending that it's not a problem, and again, that's what I said about the Fed. The Fed knows the Titanic sinking. They've just done a beautiful, wonderful job convincing the passengers who are not knee deep, neck deep in water that everything's fine. They're just taking a quick dip. So the Fed is actually, I don't know how they've spun it to make it sound so good. Maybe people are just afraid to not believe the Fed. That might be the real reason, just denial, But the reason they're pretending that it's not a problem, and so there's no need to fight it, is because they can't. But they're never going to admit that. Well, that'd be like admitting the Titanic sinking. What are you going to do? You might as well let the passengers just go down slowly. So otherwise, they might rip you to pieces too. And so you don't want to do that. You got to think from the standpoint of the bankers what their thought processes are too. You got to think what the criminals think like. So that would be a problem for complete disasters. So they have to pretend that it's transitory, that it's not a real problem, but also pretend that if it becomes a real problem, well, they're going to do something about it. But of course, they can't do anything about it, so they won't. Peter Schiff is absolutely spot on correct about this. They're just jawboning it. That's all they can do, folks. You know, the Titanic is half. You know, the passengers are knee deep. I keep saying knee deep, neck deep in water. And the best the captain, the Fed can do is just tell everybody, "Hey, relax, relax. Everything's fine. We've got this taken care of. The new pump will be working." Meanwhile, enjoy the dip. But while prices have lagged, there are plenty that are using this cheapness to back up the truck. All right. This is what I've been talking about for quite some time, folks. Not the smartest people out there, the people that Oz, you know, the guy behind the curtain, or the person, maybe I used the wrong pronoun, the people behind the curtain, Oz, okay? The people that run everything, the people that, you know, follow the money. It all comes down to money, and these are the people that create money. So they are the kings of the world. Don't think presidents are or dictators are. The real kings of the world are the central bankers, and they are also the people that have artificial intelligence. They have computers, massive computers, artificial intelligence. They have think tanks available to them. They have endless. These people are way smarter than but they're there to make money. They can make money on the upside. They can make money on the downside. They're making money now even. Maybe not as much as they were, but they're still making money, folks. Don't ever think they're not. So they're going to keep the ship afloat as long as they possibly can, all right? But I digress a little bit, and I'll read the rest of this here. And this is what this paragraph talks about. What do the smartest people in the world own when it comes to economics and finance? What do the richest, the elite own? What does Oz own? The person behind the curtain. What does that person own? They own gold. What do they fill their vaults up with, folks? They fill their vaults up with gold. Think about that. That's a very powerful thought when you think about it. The smartest people in the world have their vaults filled with gold. They don't have it filled with diamonds, copper, and not even silver. They don't have their vaults filled with cryptocurrencies, for sure. They want you to accept cryptocurrencies. They like that idea because that's where they're eventually going in a cashless society. But what do they own? They own gold. Why do they own gold, folks? Well, you answer that for yourself. I'm not even going to explain that. Let me read the rest of this article. And the China Central Bank, take a look at this. Gold demand in China was up in September as the country approaches a peak gold buying season. September is typically a strong month for a wholesale gold demand in China as it leads up to an important holiday season. October is traditionally, again, what VBL talked about as well. We're coming into our traditional months of when precious metals go up substantially. Sip of coffee here, pardon me. October is traditionally a big month for gold jewelry sales during the 7-day national holiday early in the month. Both gold withdrawals from Shanghai Gold Exchange and September gold imports in August were up, a sign that Chinese gold market continues to recover after it was hit hard by the pandemic. Rising local premiums also signal global growing demand for gold in China. The local gold price premium rolled for a third straight month. So it appears, I'm going to kind of skip over things, it appears that the Chinese and the Russians get it. And Peter Schiff thinks that the markets will figure this out eventually. Now let's read Peter Schiff's quote here, and we'll conclude this article down here. In an inflationary environment, and we are in the most inflationary environment we've ever been in, the riskiest things that you can own are bonds, and it doesn't matter what bond you have. Treasuries are no safer than the riskiest junk bond when the threat is a loss of purchasing power to inflation. The real safe haven in this environment is gold. Again, this is about wealth preservation, folks. It's been around for 5,000 years. It's what Oz has in his safe. And as soon as the investors understand the difference between gold and treasuries, they will start moving into gold as a safe haven. And they will not be deterred in their buying of gold when bonds go down, because they will expect bonds to go down. When you're looking to remove inflation risks from your portfolio, you sell your bonds, including treasuries, and you buy gold and silver. And this is what, well, here, I'll finish this right here. It's universality and 4,000 year, I always say 5,000 years, but 4,000-year-old history means gold is better positioned than cryptocurrencies as a hedge against an inflationary environment that will have deep and meaningful impacts on our capital, Garofalo concluded. And absolutely, gold's been around for 4,000 years. It's made by colliding neutron stars. It's very rare here on our Earth, on Earth here. In the galaxy, it's probably not so rare, but it's going to be 1,000, not 1,000, it's going to be hundreds of years before we ever mine in the galaxy, and by then we'll probably be living on other planets, and it won't mean that much. But in our lifetime, it's major, folks. It's real. It's made by stars, not made by some guy named Satchmo. Sorry, I forget what. No, the guy that created Bitcoin. What's his name? I forgot already. Satchmo. Sorry, that was a joke, actually. Central banks own it. It's been around for 4,000 plus years. It's not going anywhere. It's a good thing to own. And sorry, I don't mean to make you dizzy. Look away from your screen. The real safe haven, and again, what he talks about up here is that when people see the writing on the wall, they're going to move into gold. And this is what when I said that when we wake up one morning and you see that gold's just flying and silver's flying, that's the day. That's the day when people make that realization, and the big money out there makes realization, and they just start moving in force. And it doesn't take much. It's gold and silver are such small markets, small markets. It takes a small amount of money from all that Wall Street money to go into gold and silver, and it would just double and triple. Think about that. It's true. Well, let me move along to an article here in Seeking Alpha. I thought was pretty good. I'm not going to read this because we'll be here for 4 hours, but I'll do the summary and key points. Florian Grums wrote this. You can read this for free, I believe, on Seeking Alpha. It's in the markets under gold and precious metals articles, again, which I think you can read without a subscription. And the summary says the sum of fundamental facts is overrun on how the next large turning point could set silver into stellar motion. There's plenty of evidence that once the demand for silver increases, a short squeeze might be triggered. Consequently, silver prices might soar beyond typical trend steepness. At the moment, we are on the verge of price trading near the red resistance downtrend line, and he's got some quad blah 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 partial positions. All right, more technical stuff. No less, it seems across the board, a lot of the people that write articles, Seeking Alpha, ZH. Just across the board, there seems to be a general consensus or a general feeling that we're looking for some explosive movements in gold and silver coming up here. Is it going to happen before the end of the year? I don't know. Does it matter to me if it does or not? Not really. Why? Because I know it's going to happen, and it's going to happen, not too far in the distant future. But does it matter if it happens this year or the beginning of next year? Not really. It's going to happen. Meanwhile, it'll just give you an opportunity to stack more stuff at these lower prices. That's my opinion. Butler Research, highly recommend that if you gold and silver, particularly silver, that you read Ted Butler stuff on Butler Research. I have become smarter than the average bear just because I subscribe to his website, and he doesn't know me. He doesn't know me from Shinola, so I'm not getting paid to say that. I'm just impressed with the guy's writing. Same thing with GATA.org. If you want to know who controls the gold markets, just like Ted Butler tells you who controls the silver markets, GATA will tell you who controls the gold markets. Some good articles on here. This was kind of cool. They just an island of gold. They found all kinds in Indonesia. Apparently, now don't worry, folks. This is not like they found 60,000 tons of gold. We're just talking about some really cool artifacts in an area that we were unfamiliar with. The history here is going to be pretty rich when we start to learn more about this. And small decline in biz gold swaps in August. Interviewing Ron Paul and Daniel Cambone marvels at gold's failure to reflect inflation. I got to read that, actually. That looks kind of interesting. I haven't had a chance to look at that yet. So I will read this later. But meanwhile, hey, you can beat me to it. GATA.org is free to read, folks. And you should probably be, again, if you don't have this on your bookmarks bar, you should put it up there, rereading this once a week, and it'll make you smarter than the average bear as well. Well, Wall Street Silver. I like this site. I made a post last night, seemed to get a little traction here. We'll see what happens. And I kind of quoted what Butler Research said this week. And again, Ted Butler says right here, and send this to the CEO, so I guess he didn't mind me sharing this paragraph. But Ted Butler says, the mere fact that it can openly and consistently accuse the COMEX and its owner, the CME Group, of running a monumental and corrupt bucket shop. And he says in parentheses, send this to the CEO. Well, I kind of am right here. I'm sharing it with everyone that can send it to the CEO. With no blowback or denial should be proof enough that this outfit is as crooked as a June day is long. But I do intend more rigorous and focused effort ahead. So I posted that out on Wall Street WSS, and this is my comment I put. The man says it like it is. Imagine this, if you will, a few hundred or more apes. That's what the folks on Wall Street Silver call themselves, silver apes. Silver apes calling COMEX, CME, and CFTC and daily, maybe not daily, to complain about the crooked 4 to 8 commercial banks manipulating silver prices, question mark. Then start calling your lawmakers. Trust me, it would make an impact. It needs to be organized on WSS. And I really believe this. I think Wall Street Silver is a wonderful forum out there. They've got the numbers. I mean, they've got people. They've got the enthusiasm. And I think what they're out there doing is they're encouraging people to buy more physical silver, and that's cool. That's cool, but that is really not going to, I mean, you got to remember how much silver is out there. I mean, we mine, what, 600 or 800, I think we mine 800 million ounces a year or something like that in silver. I think, I'm kind of pulling it out of my ass there, but that being the case, you know, we're just, you'd have to have a million apes out there all buying 10 ounces or 1 ounce bars at a time at the same time. However, I see there is good value in buying the silver. There's good value in encouraging that. It is taking silver off the retail market, which every ounce you take off is another ounce those effers don't have. And but the thing is that what they do have is they have the numbers to be very powerful on a call-in. You know, say for example, Ted Butler wrote a nice script for Wall Street Silver WSS, and I gave him the script and said, here, you know, create a website WSS or something like that for where people can call their congressman and their senator and explain what's happening in the COMEX markets and how CME Group and COMEX and the 4 to 8 short banks have been robbing small retailers of price structure and prices by manipulating these prices. You know, most any markets prices manipulated is illegal. In this case, it's like a casino, and that's what the CME Group is. They run COMEX. CME runs the casino. However, when the casino starts cheating its customers, okay, and that's exactly what we get going on. The CME is cheating its real customers. And their customers are the central banks. But say, for example, if every time you walked into a casino, you will go there for fun, the casino gave the big whales, you know, the richest people, they gave them better odds. So they said, all right, and they allowed them, and sometimes they turned a blind eye to their, to their cheating as well. So imagine a casino turning a blind eye to cheating and giving better odds to favored customers, and that's what they do to the not central commercial banks, all right? And you know why they do it too is because they can make a lot more money at the detriment to the smaller players. Now think about this, and you and I being the smaller players. That's exactly what you got going on with COMEX and the CME. So I really think that the WSS has a great opportunity to fly with this, get lots of good press, make a script that their members could call really politely and civilly and say, hey, my name is Brian Kuzmar, and I've been hurt by these guys and by this direct manipulation by CME. And the CFTC's lack of ability or lack of intelligence to do anything against this. So I think it's a great idea. I'm going to keep pushing for it on the WSS group. And if you're not a member of WSS, I highly recommend you do. It's pretty cool. Well, let's take a look at the video on Friday, Silver and Gold Eruption. That was kind of a joke on, I stole Ted Butler. God, I say Ted Butler a lot lately, don't I? You'd think I was in love with the guy. Silver and Gold Eruption. I caught a little flack for saying Silver and Gold exploded last week. A little flack, it was fun. Nothing serious I lose sleep over. So I said, you know what, let me try Ted. Ted used the word eruption. So not quite as same as exploded, I think. Eruptions can be smaller, right, than an explosion. I don't know. So anyway, that was the reason for, but it did. Gold did erupt, and then it kind of took a tanker in Friday afternoon. So let's take a look at some questions on here. I'd like to thank everybody for watching. And there's a gentleman out here, Hunter Bus, that is into the graphs and charts and stuff like that. And I want to read what he says. I hope this is correct. Coincidentally, 2485 was the resistance zone, which also coincided with the 100-day moving average. As silver hit this, it was rejected, but this is simply a pit stop. The short-term pattern is nearly identical as the bottom pivot pattern, inverse head and shoulders. So expect a pullback, possibly back down to 23.35 spot. And by the way, Hunter or Bust, I really appreciate you posting this out here. You know, charts are one thing I've never never really studied very often, but it's kind of interesting to look at them. I'm looking at them more and more. And well, here, let me keep reading this. Spot before we attack the $25 area onto 27.50. The big 18-month pattern is intact and looking extremely strong right now. But again, the move to 27.50 will appear to be difficult as a climber scaling a vertical wall. But this is due to the behavior of the market as the tug of war continues. But when we close above 25, the 27.50 area will be like a magnet and start pulling prices higher. And once we challenge, hit the 27.50 area, there will be one more correction drifting down to 26. Then there will be some trigger news, which will coincide with this technical low, which will launch silver out of 27, blow through 30, catch the bus stops, and short covering banks will be scrambling to liquidate. Can't tell you the trigger, but rest assured the gun is loaded with a full 6 barrels. Well, I got to tell you, out of all the charts and chartists that I've heard out there, I like this one the best. I hope you're right, Hunter or Bust. I really do. I hope this is exactly how it works out. I'll be a big fan of you. In fact, I'll have you. I'll put a special place on my page for you just to post, and I'll pin it at the top. No less. Listen, I did diss charts a while back ago. I only dissed them. I didn't diss them really. I think there's a place for them, but again, it's not a crystal ball. You know, it's not absolute. Well, a lot of times when I see charts, you see guys saying, well, what's the other side of that? Well, if it doesn't break 27.50, then it's going to go down a little bit lower. It'll stay sideways. So I think chartists, based on, you know, past events, can give all kinds of different scenarios based on what's happened in the past and similar patterns that pop up, you know, head and shoulder patterns and all this. However, if they were dead on accurate, I mean, I think we'd all be rich. And there wouldn't be a market. So, hey, thanks for 100 or Bust. And again, I hope this is correct. And I really appreciate you taking the time to do this and post it. I sincerely do. Thanks again. And hello, my world way to Helen. Hello, I've come across your channel. I love the fish tank. I look forward to seeing. Hey, thank you. Appreciate you watching. Matt O'San says MMT says sovereign countries don't have to worry about debt if they print the money because default is all. Yeah, it's true. MMT is delusional, and see, MMT is what happens when you send a socialist to an economic school. So they find a way to pervert something. And let's see, the left always attacks. Okay. Thank you for watching too, Delene. Appreciate that. Stephine Klein. Stephine. Silver suppression won't last long when the market riggers realize China's stashing silver because the world doesn't yet know they're using it to build their intercontinental hypersonic weapons. Well, silver is used in, I was told a long time ago, there was 100 ounces or 500 ounces or some crazy amount of silver used in Tomahawk missiles back when we used showing my age, back when we used Tomahawk missiles. And that's probably true. Electronics, again, last place you want something failing is on submarines. Also, I heard use a ton of silver. On submarines. They use a lot of silver because of corrosion. Thanks for watching. I appreciate that, Stephine. And Whippersnapper says, Dorothy's flying monkeys attack again. The indignity of the traders raping the fair market stink like a pack of hyenas. Absolutely. Thanks for watching, Silver Loving Lou. Perpetual Traveler says, I think we need to start counting the number of times you say monkey hammer in a video. My bet is over 100. You just made me say it again. Damn you. Thanks for watching, Michael Matthews, Jim C., and Joey from Seattle, Last Living Cowboy. I really appreciate all of you watching, and some of you new folks as well. Excuse me, didn't mean to cough in your ear there. Sorry about that. Well, that's it, folks. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals. Who am I? I've been doing this since 1977, second-generation dealer, know my stuff. And I advertise to beat APMEX, JM, SD Bullion, which I think are the big guys out there. So I can beat their prices. I can also give better advice, and not better advice, but I can give personal advice, something they really can't do. And my expenses are a lot lower. If you don't have a guy like me in your neighborhood, I highly recommend, if you're watching my videos, find yourself a good local coin store or a local bullion store that's been around for a little while. And if their prices are on the little high side, ask them if they'll beat the big three guys. Most of the time they will. If they're smart, if you're competitive, you will. And again, you're local. Hey, thanks again for watching. Have yourself a great day, and I'll talk to you soon. Bye now.